right, so we've seen the overview of the closing process. We know which accounts will be closing and where we'll be closing them to. The best way to illustrate the closing process is by working through an example. So if you haven't already, go ahead and download your copy of Luna Company. So we're given some information for the company, specifically their adjusted trial balance. That's really all we need is their adjusted trial balance. And we're asked to prepare any necessary closing entries at year end. We know the accounts to close are your temporary accounts, which are your ready accounts, revenue, all expenses, dividends, and that new account income summary. Okay, so let's locate those. So the first revenue account we see, right, service revenue. Now I know there's this other revenue account, right, unearned revenue, but remember that's a liability account, right? And on your notes, we said liabilities are permanent accounts. They're going to remain open. They will not be closed. So don't get confused by that one. You know, since chapter 3, unearned revenue is a liability. All right, service revenue. So for me, when we're just starting to learn this, it might be easier to think of the T account. So service revenue has a balance on the credit side of $53,000, right? We know we have to close all these accounts. These, by closing, we mean bring to a zero balance. Bring to a zero balance. So we need to zero out this account. So to zero out revenue, you're going to need an entry on the debit side of the same amount, right? Of $53,000. So let's go ahead and journalize that. So these are all done at the end of the period. We know our debit is going to be that service revenue account for the full balance. The rules of journal entry still apply. Debits have to equal credits. We need our date. We need our explanations to close revenue accounts. Now we're wondering what the heck is going to be our credit offset. Go back to those wonderful overview notes that we just did. Revenue closes to income summary. Okay, that's where we're going to close it to. Income summary, which is that new account that's only open for the purpose of closing revenue and expenses. There, done. Let's post at the same time. So now we have a zero balance in our revenue account and we have closed revenue. That's the only revenue one we have. If we had anything else like service or sales revenue, miscellaneous revenue, interest revenue, we would also have to close it. But in this example, we just had the one. Let's close all of our expenses. It looks like we have 3. You need to close each one individually. Okay, so you have your rent expense with a $12,000 debit balance. You have your utility expense with $1,350 on the debit side. And then you have your salaries and wages expense with $35,000 on the debit side. Okay, we have to close all these, which means bring them to zero, right? So I think you can tell this means we need to credit all those expense accounts. So leave space for our debit and let's go ahead and credit rent expense, utility expense, and then salaries and wages. In case you're wondering the order of the credits, it typically goes in your chart of accounts order, which we know the adjusted trial balance is already in, which is why I'm just following the order it appeared on the trial balance. Okay, put in your balance, 12,000, 1350, and 35. Okay, so what's the sum of your credits? Add that up. 48,350. 48,350, because the sum of your debits must equal the sum of your credits. Now, in terms of what account are we going to use, go back to those overview notes Expenses will close to income summary. Income summary. And I'm just kind of posting as we go. We know that posting is the next step, right? Prepare the entries and then post. I think it's easy to see, the effect if I just post as we go. So I'll just go ahead and do that. 1350 and 12, because that gives us the 0 balance that we need. We've closed all of our expenses. Next one, close off your dividends. Dividends has a normal balance, debit balance. It's 1,500. We need to get it to 0, so we know we're going to have to credit dividends. Oh, I should do my explanation. To close expense accounts. We need to credit dividends. To close the dividend account. 1,500 on the credit side, because that gives us the 0 balance in that temporary account. What are we going to close it to? What's your offset account going to be? You can go back to your notes. Okay, dividends closes to retained earnings. Okay, income summary only closes the items that make up net income, revenue and expenses, not dividends, Dividends goes right to retained earnings. All right, I'm going to put little check marks next to everything that I've posted because we don't have a posting reference column here. Okay, so you can see I need to post to income summary and retained earnings still. Income summary on the credit side for that first journal entry, 53. On the debit side, 48,350. Okay, let's figure out what that balance is. 4,650. So this provides us with the opportunity to check. That should equal your net income. Okay, the balance and income summary before closing it should equal net income. Let me say it one more time. The balance and income summary before closing the account should equal your net income. Okay, so it's a chance for you to check against that company's income statement, because presumably we would have already completed that, right? If you look back at your accounting cycle, we had prepared the financial statements, which of course includes the income statement. So you can just go back and make sure that the balance and income summary agrees to that income statement. It's a nice little extra check for us, right? All right, so we had to calculate that balance. Why? Because we have to close the balance and income summary. We have to bring it to a 0. So looks like we need to debit income summary. Debit income summary for the balance of 4,650, because a debit will offset that credit and give us that 0 balance. Now, of course, we need to have an offset account in our journal entry to close income summary. What is that credit offset account? Go back to your notes if you're not sure. Income summary will also close to retained earnings. Retained earnings. Okay, I posted that part already. Let's put up a T account for retained earnings because we haven't been posting there. Retained earnings has a beginning balance of 21,700 on the credit side. And then we posted, oops, forgot to fill that in. Post this debit of 1,500 for dividends. Post net income of 4,650. Let's figure out your ending balance. 24,850. Now it's okay that there is a balance in the retained earnings, because remember, retained earnings is a permanent account, So you do expect to have a balance there, and it should capture everything from the year. Your net income for the year, your dividend payments for the year, all is reflected in retained earnings. All right, so there's your closing entries. Not bad, right? Considering some of the other entries you've seen, like adjusting entries. This one, you're just bringing these accounts, the temporary accounts, to zero, right? That's it. Your offset's either going to be income summary or retained earnings. Take a minute, reflect on that. We just did the journalizing and the posting. Next, we'll go ahead and prepare the post-closing trial balance.